All right, everyone. Welcome to this week's episode of the Peaking Podcast. We have Ben York with us. He is the CEO of Genetica OC. Ben, welcome to the show. Would love to get to know you and hear a little bit about your story. Tell us about yourself.
Yeah, thanks for having me. Yeah, so this is my first stint in the entrepreneurial seat. It's kind of a meandering path. I went to school for economics and thought that I was going to be in finance for my career. That's what all my friends were doing. That's what, family members had done. And I was like, okay, this is the right path for me, right? Pretty quickly realized once I got the gig that I enjoyed a lot of parts of it, but it wasn't the right fit for me long term. I was kind of like looking around and like I wanted to apply my financial skill set, but like the trading desk was not just not the right environment for me. And so love following the news cycles and markets and things like that. But I wasn't sure how to apply that skill set to the tech world where I had more of an interest. So I did what a lot of people do. I packed up my bags, moved out to San Francisco, and tried to find a job at a startup. And so that went well for a little while. Got some operating experience at an EMR company for a couple of years. I like to think that experience taught me a lot of like, the challenges of a startup environment, from an employee standpoint, right? Like what they're going through every day, how they view things, and what kind of transparency you have between the C-suite and the employees. Um, but wanted to get into venture capital and wasn't really sure how to do that. So I went through a program called Venture University, which was super early on for that program. It was the second cohort, and at the time, like I told my parents about it, and they were like, "Why are you looking at this trade school? It's like you're gonna go to Trump University. They're gonna take your money, and then like you've got a job. Like, what are you doing? What are you thinking?" And so I was talking to the founder of that program, and he's like, "Look, VCs make calculated bets on individuals, and that's kind of what you're doing here." And that kind of clicked in my mind. I was like, yeah, like let's go for it. Let's roll the dice and see what we can do. And so that was a really great crash course in everything venture capital. Got to like learn how deals are structured, sourcing, all of those different kinds of things. And helped me land my first full-time gig in the VC space with a company called the ArcView Group and ArcView Ventures. So it's an investor network and venture fund. And it's a firm I've been tracking for a while. And reached out a couple times, but like, it's just one of those things where like fate kind of happens. They were coming into the office at VU and nobody knew them, nobody wanted to meet with them. And I raised my hand and I got in the room, I got to listen in, and then that turned into an interview, and the kind of rest was history. So, um, spent a couple of years there leading deal flow and due diligence, and then went to a family office where I oversaw an individual's full portfolio across asset classes, and then also managed his accelerator program too. That's where I met my co-founder. He pitched me on the vision, and I immediately got it. But yeah, I brought it to the family office. It was too early for them, and hindsight being 2020, I'm super thankful for that. That allowed me to come on as an advisor, build a working relationship with my partner, and join him full time, shortly thereafter. And the rest is history, as they say.
Yeah, yeah. That's quite the meandering journey, as you did say, for sure, for sure. What are some of the biggest lessons you would take away from your early days that you're bringing to being a CEO operator now?
Yeah, I think from the earliest days, thinking about it from a markets perspective, like I you see immediately how rates impact the public equity markets, and until you know 2021, 2022, and in 23, I didn't really understand how that impacted the private markets as well. And so being able to see how some of those implications from a macro standpoint impact the asset allocation and actual check writing from VCs was a pretty interesting learning curve. I mean, thankfully we were able to navigate it. Not all startups were over that period, but it was really interesting. I mean, the economics and financial markets background definitely helped me, through that period and understand kind of what was going on from that macro level. But um,
Can you give
it's one thing that,
examples?
yeah. So like, I think that the one thing that stood out to me is just, the if you can get a rate of return and a risk-free asset that is, above 4%, as they started raising rates, that means that that the comparable return in the startup environment has to be, that much less risky as well. And so
Yeah.
you're starting to think about like instead of growth at all costs, it's a focus on the bottom line and profitability and revenue per employee. And some of those metrics that, in the past, the decade prior, those were vanity metrics is the wrong word, but that wasn't what was scrutinized by VCs. It was like, okay, if I can funnel in how much cash that turns into, what kind of marketing spend and increasing the top line at all costs. And that environment, effectively ended, and we're still seeing the ramifications of that. It's a little bit different now too with AI, but um, I think that that profitability mindset has played an impact in the AI landscape for startups today too.
Yeah. Yeah. And so originally when you met the founder of Genetica OC, so that was a pitch to you as a venture analyst then?
Yeah, exactly. And so he actually pitched me on a different concept even before that one,
Hmm.
when I was at the ArcView group, and yeah, I liked how his enthusiasm, and I really liked the concepts too. But I was like, look, the market size isn't big enough for that problem. Like actually I said that solution. The market's just not big enough
Yeah.
for it to be a VC backable investment. And so he likes to tell that story. That was the first no that he received. And so he went back to the drawing board and thought up the new concept and pitched me again when I was at the family office. And that second pitch absolutely clicked and immediately resonated with me. I still remember like being on that call and being like, oh man, this is the one. This is the one I got to be a part of. And
Yeah.
so, I think it was helpful for him because he got to step back, reframe, like, okay, what am I actually addressing here? What is the core problem? And and um, and it's something that we're still addressing today in a couple different markets, but it's still the same core thesis.
Yeah. Can you walk us through what it was like working in the venture firms? What is that day to day? What is the, when you're doing due diligence, what things are you looking at? Where are you spending your time? Could you
Yeah.
break that down?
Yeah, I think a lot of it is I wish most people spent more time getting to know the actual founders. I think that that's an underrated part of it. And there are some firms that emphasize like building the relationship and understanding the founders and things of that nature. But like you always hear about how like there's a certain mold of individual that is, suited, especially suited for entrepreneurship. And you can have all the right metrics on paper, you can put together the best pitch deck and whatever else. If you don't have that same kind of ethos and just absolute desire and passion for what you're solving, are you going to put up with the ups and downs of the roller coaster that is the startup life, right? And so, I think that you know, that's one area where we shine. And there was one fund that we talked to that was way different from all the others, where they like, that was all the first call was. It's like, tell me your story. Who are you? What do you care about? What are you doing this for? And I was like, that's such a refreshing take on like getting to know the entrepreneur. And like, you can, work through all the numbers and stuff later on, but like, that's such an important part of the process that I think just gets overlooked. A lot of the day to day, especially in in various roles, but a lot of the day to day was like sourcing companies, right? Like looking through PitchBook or Crunchbase or headlines or whatever, and just like trying to understand different markets and how who's raising what from who, and I'm trying to understand their theses as well around different segments. And then on the due diligence side, there's like a standard checklist that we used to have and run through. But, I think now having gone through that process on the other side of the table, I'm realizing like how incomplete it was. And part of it is like that relationship building side too. But, there's just a lot of whether it's a technical diligence or just in a variety of other categories, go to market strategy, whatever else, like that I think, back in the day we were lighter on than I certainly would be today.
Hmm. What are, you know, so you talked about the founders themselves, who they are, their motivations. What else is very critical if you're, looking for investment? What are some of the things that, other entrepreneurs starting a company can really think about as they're either putting together their pitch decks, and putting together their service, their product, their offerings? What's really important, do you think, these days?
I think I think this has always been true, but it's like the way I frame it is like you got to kiss a lot of frogs to get to the prince or the princess, right? It's like, yeah, there it's an at bat game. Like in the same way that venture is, dominated by power law, it's the same thing on the entrepreneur side, but in a little bit of a different context. Like the name of the game is just like number of at bats, number of conversations you can have, because you just, similar to kind of how I told that origin story too. It's like you never know what one conversation ends up leading to, another opportunity down the line. Or like there's a couple times when I talk to a fund and they're like, hey, this is really cool, not a fit for X, Y, and Z reasons, but I think that these three groups would actually be really interesting. Like I'll make an intro. And so you just never know where some of those kind of avenues can lead, but it can be really discouraging. Like not even in just like the volume of intro calls, but like in the outreach as well. Like that was one of the things that we always used to talk about um, in my prior roles is like, the way to get in front of investors is get that warm intro, get that, mutual connection, and ideally a couple different mutual connections who can make those introductions. But the kind of like lag time on that process to reach out to a contact who is willing even to make an intro, get their buy-in, get them to send that email, and let alone go through that twice. Like to do that like a couple hundred times for different venture funds, like that's a time consuming process. And there's definitely a time delay on the initial outreach, that mutual connection, and potentially securing the intro call there too. So like that kind of just grit and mentality of like you got to leave no stone unturned is essential.
Where are you coming across contacts for this? Is this something where you can just go look people up and they start you at, the associate, and so you're working your way up the ladder, or what does that look like?
Yeah, I think that's an interesting question. I think about it in two different ways, and I think that there's pros and cons to each. On the one hand, like getting the attention of an analyst or an associate is going to be a lot easier because part of their job is to source and to speak with companies, and that's how they build experience. But by the same token, like let's say you get buy-in after that first conversation, you need to be able to trust that they're able to then pitch it to the higher ups of the firm to make it through that initial investment committee or whatever else, pipeline sourcing committee, whatever their process is. And that can be a difficult, like you don't really get a lot of insight into that. You don't really get any control over that process. In contrast, it's a lot harder to get the buy-in from the at the top, at the principal level, unless you're getting one of those warm intros or something like that. But once you have that attention, once you have that connection, that makes the rest of the process a little bit smoother. So I don't know. I think my thought process around this is like whatever the strongest mutual connection is the one to go after. And so the way I try to go about it is like, okay, start with, there's plenty of sites and lists that have just like a ton of VC firms. And we got a Crunchbase, subscription, and, sifting through some of those leads filtered by different categories, but it's still like, 1,000 different firms that you gotta like filter through. And so, um, we developed a process where it's like, finding those mutual connections on LinkedIn and evaluating how strong that connection was, and just kind of like sifting through hundreds of different firms to understand like, okay, one, do we fit their thesis accurately? Because there's nothing more annoying on the other side of the table than someone reaching out that like, you don't fit their thesis, you're not the right fit. Like you don't want to waste their time. You don't want to, frustrate people. That's just going to get you dismissed by other firms too. And like
Yeah.
reputation plays a role as well. So that's the kind of first filter. And then secondarily is that how strong that connection is. And then just rinse and repeat
Yeah. Yeah. Yeah.
dozens and dozens of times.
At what stage, when you joined as an advisor, what stage were they in? Were they already at, were they pre-seed? Were they seed?
Yeah. So that was like coming out of like a friends and family round into the pre-seed round.
Okay.
So we were like gearing up. We were still super early stage. Had a MVP, like got some early product market fit, early traction, but then needed to raise like that pre-seed round to higher up and to flesh out the product. And so that kind of like was late 23, and then 24 was like a lot of building. And it wasn't really until like our initial product was around product recommendations and using AI for product recommendations, especially in the alternative health space. And the original rationale for that was like if you can understand the customers better, then that can help you inform like inventory decisions and staffing decisions and all those kinds of things as well. But the goal was really always that, and going back to that original thesis that Christian had way back when, it's like the retail environment, a brick and mortar environment is just too difficult to make data-driven decisions. There's so many different tools that don't talk to each other that, you know,
Right.
if you want to make any data-driven decisions, you have to export, you have to put tables together, you have to have a degree in data science to make any sense out of that information. And so the product recommendations were always really, geared towards informing that stuff. But we didn't really even launch that kind of like next gen product until towards the end of 2024. And, we've been at it since then.
Yeah. Very cool. What was the pivot moment, or was there a pivot moment when you took that original and you said, okay, well, hey, let's apply this to restaurants, retail space?
Yeah. Yeah. That came around the start of this year.
Mm.
A combination of factors, some agreements with larger firms that meant that like hey, this market is pretty tapped out for us. Where else can we apply this core technology? And that was always the vision. I thought we would go from like, the alt health space to nutraceuticals and supplements and then like into general retail. But in a similar way, it's like, you can map those kinds of moves out as closely as you want to. You got to listen to the market and where you're getting indicators from. And internally and on the cap table and then externally as well, we were getting a lot of buy signs and positive interest from the restaurant space. One of our colleagues has a deep experience in that space. A lot of our cap table has background in that space, and it was like, can we've always designed the product to have the core architecture can be applied to any different vertical, and it just depends on how you apply the ontology to different spaces. And so it's like, okay, well, can we make that jump? Can we take that same core tech and teach it what a piece of pizza is and what that
Mhm.
means in the context of a business or a Taco Tuesday or something like that? And the results have been great so far. And it's a massive market, and it's exciting for me too to like learn a new segment as well. I'm newer to that category, and so it's been fun to learn the different dynamics and get up to speed in a new category.
Yeah. What's the simple version of what Genetica does? What are some of the features? What's the business problems it's solving?
Yeah, so the core problem uh, is really going back to that data-driven decisions in a brick and mortar environment. So my co-founder, when he first came across that problem, it was like, he's got his chain of retail stores. How do you pull information from the point of sale and the labor management and whatever other tools you're using and understand like, okay, this is how I should optimize my environment to, one, save costs, but also, increase our profit and revenue as well. Um, And so that's that core thesis, right? It's connecting the tech stack in a brick and mortar environment to make data-driven decisions and to tell you what you need to know before you need to know it. So things like, hey, there's, it's going to be a really nice day on Saturday and there's a concert down the street. It's going to be busier than usual. You should add an extra employee because it's going to be, a lot of customers in the store. You should also stock up on these additional items in inventory because, that's your top seller and you don't want to run out of those items. This is the, amount that you're projected to miss out on if you don't order ahead of time.
Yeah.
So like really prescriptive, really, careful
Yes.
insights, yeah, to just help optimize those operations.
Makes so much sense. Are you plugging into a lot of different systems and tools? Are you, curating your own data? How does that look?
Yeah, it's a little bit of both. We plug into, the kind of core four, the point of sale, labor management, inventory, probably QuickBooks, something along those lines as well. It depends on how much data our customers want us to integrate with, but that's kind of like the standard set. And so we'll connect to all of those tools, pull all of that data into that one place to give you a full sense of how your operation is running. But it's really about kind of detecting what those anomalies are. Like, hey, this looks out of whack. Maybe it's a cash drawer variance. Maybe it's like, too many discounts applied for, a specific server or something like that. Just like, things that you should look into and double click on. Um, and But we also do layer in third party data as well, whether that's, again, weather, local events, traffic patterns. We have agents that pull in sentiment analysis too. So it's like not just your internal data, but also understanding like, okay, this is what's being said about my restaurant, across Yelp and Google reviews
Yeah.
and Reddit and whatever else, because a lot of those places like Reddit especially, get overlooked when it comes to sentiment, and it's hard to track and monitor all that stuff as well. It ends up being a full-time job in some sense. um, so being able to pull that in, compare that to the context that you have from all your other tools as well, it just provides more 360 view of how the business is operating.
Yeah. Cool. What does your customer base look like currently?
So it's a pretty diverse mix. We still have some of the legacy clients from the previous business model, but it's also individual restaurant chains. We like to target the mid-market segment. So let's say like 20 to a couple hundred locations is kind of the right fit for us from a data visibility standpoint and kind of a data democratization standpoint. That's kind of
Mhm.
like where our sweet spot is. And then also working with software providers as well. So we white label our tool to other software companies, specific features of it for their context. But that helps us to get, cover a lot more ground, lower our costs, and cost to deliver. So, we kind of need both of those segments, both the direct sales to those brick and mortar environments, but also to the software companies. And they kind of complement each other in different ways. Maybe higher cost to deliver, but more well-rounded data set for us, lower cost to deliver, a little bit more high profitable, but a little bit more narrow data that we have access to.
Yeah. So what is that go-to-market strategy, that sales strategy? How are you, or more client acquisition, if you will?
Yeah.
What does that look like?
We've traditionally relied on our network, and it's not something that we can continue to rely on to scale even further. But from our immediate connections, from our cap table, like relying on intros from that immediate inner circle, it's been really good for us in the earliest days in the restaurant space. It's allowed us to really understand like um, well, get to the decision makers faster. But I mean, going forward, it's going to have to be more, you know, all encompassing using the traditional digital marketing channels to continue to fill up the top of the funnel. We're launching for the first time a free tier of our product as well. So that'll be more focused on the SMB segment, and so a lot of those digital aspects will be really helpful for um, targeting those individual mom and pop and more SMB target customers. And then the idea is like they expand to the paid tier and potentially then also to the enterprise tier depending on how many locations that they have.
Yeah. How are you differentiating enterprise and your SMB markets?
Yeah, it's we look at it from a primarily a location count. So anything sub like 20 locations is probably too small to leverage the enterprise. They certainly could, but it's not in
Mhm.
our core, ICP. Um, and so we really distinguish more so from the feature set. So at those free and paid tiers, it's limited uses of our agents and alerts and how much historical data that you're able to access and a number of integrations. And then, I suppose like even a single store could theoretically have the enterprise model and just have more integrations and all of those and more capabilities on the agents and alerts side, um, which is just not our core segment to sell into directly.
Yeah. Yeah. Makes sense. What does your overall team look like right now?
We're pretty lean intentionally. It's mostly on the product side, as you might expect, and even within that, we have a lot of expertise on the data side of things too, which is maybe more uncommon for a startup at our stage. Um, we're looking to expand the team slightly, but we've actually been found a lot of success with the AI coding tools, and
Yeah.
it's allowed us to 5x our output. Like a lot of the agentic workflows we had slated for this quarter, and we got those out, over a quarter ahead of schedule. And it's because
Right.
of the throughput that we have for these tools. And it's cool too to see like some of those platforms try to connect with us as well. Like one of those groups, we're a design partner for, which is good validation too. They're like, hey, this is a really cool way that you're using our product. We'd love to learn more and engage and get feedback from you. And yeah, I think that it's cool to get that response from vendors that you work with. Like, they see what we're doing under the hood and like recognize that it's unique. And that's kind of a fun value. You don't always get that.
Yeah. How do you feel about like restaurant specifically? Do you feel how do they do with tech adoption? Like to me, I could see a mixed bag, right? You see some restaurants really leaning into it, but then a lot of it, it's still paper and, um, it's not really a robust systems that they have in place.
Yeah, it's a really good point. I think that I like to think that that's a huge opportunity though, but it is certainly can be a speed bump as well. I think that if you're working out of like Google Sheets, we can still work in that environment, and that still is doable. Not too much of an issue there. But when you're on pen and paper, yeah, it's a lot harder to like. We had spoke with one group, and it's like they're tracking inventory on like a ripped up cardboard box in the back. It's like you can't really use AI in that context. Like, yeah, you might be able to have like, a PDF reader, but then you got to scan this cardboard box, I guess. Like, I don't, you know what I mean? Like, so
It's
that's
incredible.
that's something that yeah, that's something that like I don't know that we're ready to take on just yet. Is when you are truly just pen and paper, and like that's how you manage things. Like, I don't know um, if that's quite like the right fit, but on the other end of the spectrum, like people are still clamoring for AI tools. And that's kind of why we've had such, that's why our approach has resonated so much with other software companies. It's like, it's expensive to build in-house. You're having to fight for talent. Like, but if you can plug and play with a feature set that makes sense for your audience, like that's a decent value prop. Um, and so, that's kind of what we're starting to see is like, even at the on a more sophisticated level, a lot of those operators they're not really sure how to leverage AI. They need a lot of hand holding. In a lot of cases, even if they are not even on pen and paper, but like their data isn't really in a position to be able to leverage AI in the right way. And that's something that we learned early on in the alt health space is like that's another area where there's a lot of dirty data. And we got really good at working with that in that context. And it's paid dividends for us later on as well, allowing us to be able to use AI in a myriad of different contexts.
Yeah. How do you think AI is impacting the industry in itself? Restaurants specifically, retail organizations. What's the impact there you're seeing?
A lot of what we're seeing first is around marketing and copy.
Yeah.
And I think that that's good for us because it's kind of like dipping your toe into the water and kind of
Gateway.
understanding like understanding what's possible. And it also helps those operators understand like, oh, I don't need this expertise myself. I can still do a whole lot with just these pretty straightforward tools that are readily available. And I think that that leads nicely into a product like ours, which can feel intimidating. We're talking about data science and ontologies and things like that, but then they understand like, okay, I don't have to be an expert in AI to be able to, plug and play and work with this tool. And that, alleviates a lot of the burden in kind of the getting up to speed in some of those products. Um, yeah, that's where we definitely see people adopting first. We hear a lot of people say too, like, I'll download a report and upload it into ChatGPT. And like, that's fine for a one-off, but it's not really going to give you the same kind of, again, full 360 view of how the business is operating. It's static. It's a one-off. It's not learning off of your data, all of those different things. And one of the things that we warn against too is, operators are sensitive about their SOPs. And if you're just uploading your data into a tool like that, then potentially your competitors are benefiting from that
Yeah.
foundational model, um, getting to access to your data. So it's not, super like such a straight line just yet, but like it's something that we warn against too, because you just want to be careful like you would with data in any other context.
Yeah. When you look at some of the recent client acquisitions, as well as maybe some of the exciting, fun, wow factor moments from some of your customers, what's really resonating, what's working, sell us on some great things.
I think there's two things that come to mind right away, and this is not like necessarily what I want to lead with in like a sales conversation, but
Okay.
it was really cool to see like one of our clients, cancel a large contract, couple $100,000 contract that they have with a marketing service because they can do all the RFM and customer segmentation analysis with our tool that they were using with that firm. And like,
It's a big
you know,
deal.
yeah, and like, the reason I had the caveat to start is like, I don't want our platform to be seen as replacing humans. We think of it more as augmenting humans because you still need a human in the loop in most cases, but hopefully through our tool, you can, 5x their output instead of, replacing headcount and cutting costs in that way. I think that will happen inevitably across, all implementation of AI, but like, that was a pretty cool validating moment too. It's just that like, we can save costs
Yeah.
at that dramatically. The other is one of our customers is pretty close to one of the major point of sale companies in the restaurant space, and he gets to see their product roadmap, what they're working on, what's coming down the pipeline, and they're still super far away from what we have today. And so that was kind of a cool validating factor that what we have is still unique, that we still do have, even at the pace that AI is moving today, we still have a lot of room to grow before others start catching up. Even with all the AI tooling out there, we've still got that head start. And it validates that like in the connections between like while those point of sale might have integrations with other tools, the visibility and information you can pull from that in that context is still not the same as what we're able to provide. And so, that's not an area where, people are focused on investing in is beefing up these integrations to get more data visibility, but is a good, defendable opportunity for us in that like we can be that hub and all of those other tools and spoke that they're able to work out of.
Yeah. Very cool. And I want to make a comment on, I guess, the first one you mentioned about AI replacing, like,
Mhm.
I, I from my opinion, what you're doing, it is the exact opposite, right? In a industry, specifically restaurant industry, that is so challenging and so tough, and margins can be so slim. If you are providing a tool that allows them to operate more efficiently and effectively, long term, I mean, this is not an industry that is run on AI. You need people. It's customer service.
Yeah.
So if you allow those restaurants to effectively run their businesses, last longer, they're going to thrive, right? And that
Yeah.
offers more jobs to frontline workers. And so, like what you're doing is absolutely fantastic. And if it takes away from maybe another company that's trying to compete in that space, hey, that's good competition. That's very healthy, right? But it's really providing jobs to restaurant workers, restaurant owners, and helping them be successful and make smarter decisions. So it's
I
awesome.
appreciate
It's
that.
good.
I appreciate that. Unless, until we go to the far end of the spectrum, like the Tesla Cafe, where they've got the robots serving everybody and stuff like that.
We don't want
Until,
that.
yeah, until we hit that moment,
Society
it's
doesn't
still,
want that. No,
yeah,
I don't
not on
believe
the
it.
same page. Yeah, yeah.
Yeah. Cool. What else here? Are you using any AI tools, fun tools that really, whether that's from a work perspective, personal perspective?
Um, I, you know, it's probably bad of me to say, I don't use that many AI tools personally. I flip back and forth between ChatGPT and Claude for a lot of my day-to-day stuff. And even on the personal side too, like I use it in both in a work and a personal context, and it's been super helpful. I once I'm able to get on the other side of the fundraising hurdle, I have a little more time on my hands. I do want to get into some vibe coding. I want to
Yeah,
start to get into that, and I think if I had dedicated the time to some of that stuff, and as part of the fundraising process, maybe I could have automated some of those workflows. I was,
yeah,
the hundreds of different contexts that I'm sifting through, I probably could have automated some of that, but
sure.
that's an area that I'm excited to get into personally. It's an area that we've had a lot of success already, spinning up some concepts and then really hardening them. But I think for a non-technical finance guy like myself, I'm excited to be able to flex those muscles.
Yeah, yeah. I have to throw out a quick shout out. This was a recent podcast I did with one of the founders of Data Button. So check out
Mm,
Data Button, tool to use for you if you're looking at different things to automate, tools to build. It's a perfect tool for you to jump into. I am myself am using it for my own workflows and whatnot. So it's
that's super cool.
fantastic. Yeah,
Yeah, I'll
check it
definitely
out.
check that out. Thanks. Yeah, yeah.
Cool. Cool. Well, where can people find you? How can they help the cause? What does that look like?
Yeah, feel free to reach out directly. My email is ben@getgenetica.com. Um, you can also find out more about our product on the restaurant side at serveitup.ai. And sign up for free, test out the product, play around with it, tell your friends. We want feedback about how the product is working and always looking to improve it, especially in the SMB context and help out some small businesses. So, yeah, probably the two best places to get in touch.
Cool. Well, it's been a pleasure, Ben. Thanks for coming on the show, and looking forward to staying in touch and watching your journey.
Likewise. Thanks for the time.
All right.